but we brethren. Run up a check and it's pending. She talking my news, we'll send them.
Hey guys, what's going on? It is your educator, Modest Phillips, coming live from Tradehouse, California, right? And you guys can see the title of this video right here is called What is Smart Money? So I want to talk to you guys real quick for like a quick minute before I jump into this, because this is only going to be about a 15-minute video. I want to kind of get things rolling out of the way. So I know a lot of people in this group, or if you don't know what Forex is, or if you don't trading stocks, binary options, whatever you're trading, right? This is for you, right? This is general knowledge. This is like a mindset that we're talking about right here when you hear us talking about smart money. So I know a lot of people been searching and looking for that thing that's going to be able to give them, you know, what they actually need when it comes to trading, right? One of the things that I realize is, hold on a second. A second. Okay, cool. So one thing that I've realized is, my bad about that, but one thing I realized is that everybody is searching for that trading, like that way that they can get trading and make it easier for themselves, but it isn't the strategy that's making it hard for you. It's 90% of it obviously is yourself. You got to work on yourself. You got to work on your development, right? But the other 90% of the other half of it has to do with not having the correct knowledge, if you get what I'm saying. So what I want to do is I want to talk about what is smart money with you guys for a quick example. So right now we're going to go into the definition. We're going to type in smart money right here. Right. So this is Investopedia that I use, and it's a free website open to the public, right? So all of this knowledge is not common, but knowledge is out there, but you got to know which knowledge is the right knowledge, right? You know, you hear a lot of people telling people, "Oh, just go look on YouTube, just go do this." It's like it's a double-edged sword to that. So what is smart money? Smart money is the capital that's being controlled by institutional investors, market mavens, central banks, funds, and other financial professionals. Smart money was originally a gambling term that referred to the wagers made by gambling with a track record of success. So let me give you a little better understanding of what we're saying. When we're looking at trading, we follow the the bigger guys, the banks, the bigger funds, the financial professionals. We want to be in line with what they're doing. Like when people say the terminology like, "Oh, the trend is your friend" and stuff like that, they like, that's cool to say, it's cute to say, but the real trend isn't just what you see on the chart. Is what the actual big guys are doing, which we term as in smart money. Like I say, this doesn't matter what asset class. This can be stocks, binaries. This can be commodities. This can be futures. This can be any of that. It like doesn't matter. So what we believe in, what we prove in our work, is that these markets are heavily manipulated by these entities, right? So I want to show you guys we want to go over here and start, doing a little bit of research. I want to take you into this. So we're over here on Wikipedia. We got the foreign exchange market, right? So the foreign exchange market is a global, decentralized, or over-the-counter OTC market for trading of currencies. This market determines foreign exchange rates for every currency. It includes all aspects of buying, selling, and exchanging currencies at current or determined prices. In terms of trading volume, it is by far the largest market in the world, followed by the credit market. The main participants in this market are the larger international banks. Financial centers around the world functions as anchors of trading between a wide range of multiple buyers and sellers around the clock. Right. So what I want to actually show you guys, and this is something that you can go top 10 currency traders, percentage of overall volume in June 2019, right? Do your research on and read a little bit more upon. But what I want to bring your attention to is right over here. You see it says top sacks. This is representing the volume that they participate in when it comes to this billion-dollar market. This is a $5.6 trillion a day market. And just look at how much participation some of these banks and these financial institutions are putting in the market. You can imagine the amount of money that they're making, and we're going to actually show some examples and actually go into a little bit of that so you can kind of have a better idea, right? So you heard all different type of things like they say down here: market makers, pension funds, insurance companies, mutual funds. All of these are all different entities that's participating in the market to make the market what it is. The market is nothing but an exchange of liquidity. Like, pairing of liquidity is what moves the market. The pairing of liquidity is what moves the market. Not your trend lines, not the harmonics, not any of that crap that we thought, that we put on our charts and actually going to get it done for us. Think about it. Why would it be moving trillions of dollars and billions of dollars these companies invest in, and you're like, oh, I could just throw a trend line up here and like, yeah, I'm pretty sure JP Morgan is sitting down looking at that trend line. No, come on, dude. Like, make it make sense. So we don't have the power to be able to access order books. So what we have to do is we have to rely on what we can see. We have to rely on information that we can research. Now, we're not big tech fundamental guys, right? We do really, really little fundamental work. The majority of our work is in ourselves. And then when it comes to technical, we obviously have, I have a full mentorship open right now, that can teach you A to Z on how to actually see what we see in the information, right? Like some more stuff that I'm gonna be showing you to actually see it on the charts and be able to take advantage and be able to get in on some of these moves and some of these directions and trends and be in the right way with smart money. So when you hear say smart money, this is what we're talking about. Smart money is the people who has the biggest interest in the market, because what happens is when a country's interest rates are going up and down, that's basically telling the outside people looking in if this is a safe haven for investing. All of the bigger companies that you see and stuff that people trade, like US 30, if you break down those companies and then you break down the materials or the service or goods that those companies offer, it all has to do with how those assets go up and down. Because if the country is doing bad, then it means that all the big companies that build planes, all the companies that provide the metal and the bullets and the tanks for the army, like all of this big money stuff, right, is going to affect that asset, right? Because the cost of raw goods is going to be higher. The cost of gold, the cost of silver is going to be better. Like, you get what I'm saying? Like, all of it is a advise you guys to go do your own research and read through this. So what I want to go over here, and this is called inner market combination, right? So let's keep going, guys. This is, you can find this on Wikipedia, just typing in foreign exchange market. I really suggest. And I haven't took you guys on any charts, man. Like, we're going to have plenty of videos where I'm going to take you guys on the charts and talk about charts, but I want to show you guys what really smart money is. Because what's the point of being on the charts if you actually don't even know what's going on and you're still chasing this imaginary strategy or this imaginary formula? You're seeing people do these things on social media and it's not duplicatable because you don't see the actual success stories of people actually being able to get it and duplicate it and do it again. Why? Because the information doesn't hold, the information doesn't stand. But right here, what we're showing you is the right information. This is the right way, right? So this is just an example of their annual reports. And each one of these numbers are actually represented by millions. You get what I'm saying? So you can get a glimpse of the type of money that quarterly or annually, yearly, however you want to break it down. This is annually. You can even look at it in quarterly, right? But this information isn't something that we're looking at to help us determine how much money we're going to make. I'm just showing you to show you how much money these financial institutions are making participating in this market, right? And you can see just the amount of just crazy numbers: 113 million, 76 million, 43 million, 80 million, 16 million, 27 million, 15 million. And these entities are moving the market. Their interest to get their orders in and out of the market is what provides the liquidity for the market to have these explosive moves. You mix that in with current world, like whatever happened in the current world, it's like a perfect formula for, and what most people look at as disaster, but for us, for a masterpiece of Picasso. So what I want to go over here is give you an example of the top 100 banks in the world, based out of in 2020. And it's information based off from some of the biggest places that we look at as far as, financial strongholds. So you got Industrial and Commercial Bank of China. These are all in China. China Construction Banking Corporation, Agriculture Bank of China. So if you could look at, this is in billions. Look at all of this money, JP Morgan, Bank of America. Look at all of this money that these banks are holding and making. Where do you think this money is being exchanged at? Right? This is what makes the market. The stuff that we see on our charts are results of the transactions that big money are making, buying, selling, hedging, getting in, getting out, right? We have this concept that I call the elephant in the foot concept. It's typically where, if you think about these orders, and I want to go show you guys something real quick so you can actually see even more in depth what I'm talking about. 2 seconds, guys. Oops, screenshots. So check this out. So, when you're your MT4, you're your broker, you usually you see your dollar lot sizes, you see your 10 lot sizes, $5 lot sizes. But I want to give you ran with your imagination on the type of orders that some of these institutions are taking. Look at these lot sizes. 1 million lot size. All right, let me get rid of that. 5 million lot size, 10 million lot size, 3 million lot size, right? 1 million lot size, 500K lot size. Just imagine putting on a lot size of 500,000, right? You couldn't even do you couldn't even fathom doing the numbers or figuring out what that was. We say 5 lots would be $50 a pip. Imagine how much 500K lots would be, right? That's like $50,000, $500,000 a pip, right? That's the type of money that these guys are making. That's the type of money that these guys are putting in the market. And what we can participate in on the retail level, right? Because there's levels. What we can participate in on the retail level, we're basically getting the spurts and the bursts of what we see. Anything that you see on a chart, when you see it, it already happened. Those orders was already placed. That's why we always tell people we're looking left to get right. And the right side is the hardest side to trade of the chart, right? So I want to go over one more definition because we got a couple more minutes. We got about 2-3 more minutes on here. I want to go over one more definition, which is liquidity. I'm not pretty sure if I know I didn't spell it right. See, I'm not really good in English, but I can do pretty good on the charts. Okay, so liquidity definition. Let's read this definition together, guys. And you can find this on investopedia.com. It's a free website. I commend you guys to get on it, get into it, and it really you can get some good reads on here. So liquidity means a person or company has sufficient liquid assets to pay the bills on time. Liquid assets, oops, that's the wrong, I'm sorry about that. That's the wrong, that wasn't what we were trying to click. We want this right here, liquidity definition. All right, 2 seconds, guys. Give me a second. We finna get it in. Watch this. We finna turn up. We finna light them up. Okay, what is liquidity? Liquidity refers to the ease with which an asset or security can be converted into ready cash without affecting its marketplace. So when people talk about liquidity runs, what do you see? Speed, right? It's when the market is allowed to manipulate to allow the market to get to a specific price without actually affecting the original order or the original intentions of what price needs to do. And that's how they get to knock the little guys out. That's how they get to use news as an excuse. That's how they get to use global pandemics as an excuse. That's how they get to use all of that stuff as an excuse to be able to knock little guys out, inject liquidity into the market to get either 2 targets or enter orders to hedge on orders that they already just exited on, right? I know that might have been a mouthful right there, but you should be getting what I'm saying. You should be following along, right? Look, and that's what we mean by when we say, oh, they're going for liquidity in the market. Oh, follow the higher time frame liquidity, because that's where the big guys are going to have their money at, right? And when you learn how to see liquidity and a technical basis on the charts, then the game changes for you. Trading will never be the same. Trading has never been the same for me, and people around me. Trading has never been viewed the same for them. So, guys, with that said, man, I'm the lead educator at Tradehouse, California.